In this video, we're going to be going through Palantir, ticker PLTR. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, to get straight into it, you can see Palantir is sitting around $15.50. We're up about 6.5% today. Now, quickly want to put a disclaimer is we do now have a position in this stock. We will go through the trade plan at the end, but firstly, we will go through the analysis if you did want to see how I'm personally trading this. Now, to get straight into it, what are these key levels I'd be paying attention to? As always, we pay attention to the 6 month and 1 year. What you can see very clearly on Palantir is that we are extremely overbought. And how do you justify if a stock is extremely overbought or oversold? If it's really above these green deviations, that is what's known as our third deviations. We consider this extremely overbought. So now we can see it's extremely overbought. What are the key things to be paying attention to? So we can see we do have one more resistance. This is our fourth deviation on the 6 month, around $15.75. Now, these levels I don't pay too much focus on. These fourth deviations, they're not kind of institutionally used. They're not really used so much by anyone. So there's never going to be as much importance on this than at the third, second, or first. So instantly we know this. Again, I don't really trade off it. I just like to use it and have it on the chart just so I get a rough idea of where that next level is if we do end up breaking our third deviation. Now, why have I got short? And again, because this is extremely overbought, I would be more bearish on it than I would be bullish. That's not to say it can't continue up. And again, when we go through our trade plan, you'll see how we are hedging that risk. But again, if we do go further up, we don't really have much resistances. And that's just because, again, from a deviation perspective, there isn't really much to pay attention to. So what I'd be paying attention to is really the psychological level. So you've got $17.50. You're going to have $20. So these would be the key psychological levels I'd be paying attention to. But what you can also pay attention to is 21.35. So what this is the second deviation on the max term time frame. So this level will be quite key if we come into it. You can see $13.50 was our first deviation on the max term time frame. We tested this twice, pulled back both times, broke above it, kind of tested it as a support, and now we're kind of holding it. So again, they are significant. I actually prefer the 6 month and the 1 year, but it's definitely something to be paying attention to. So if you want that long-term target, you are much more bullish on Palantir. That would kind of be our longer-term target. Again, I'm not trading to that level, but if we did get there, I would start getting short bias again, and again, probably look to play that short bias. So what are now going to be targets if you're trading at short bias or you're waiting for a pullback to potentially get long? What are going to be supports I'd be paying attention to? So 14.25, third deviation on the 6 month. Again, likely to pull back to this level. Again, we've had this now multiple times. It wouldn't be a surprise to pull back to this level once again. As long as we can hold this, so again, we are still going to have to be a bit more bullish, even though it is overbought. But if we can start to break below this, this is really what I'm paying attention to. Come down to our first deviation on the maximum time frame, which is at 13.50, and right below that, we have the $13.25 support. So really a key zone to be paying attention to in that range. And if we start to break that, we then have 12.65, 11.70, and 11.10 as all supports on the way down. Now, again, I'm more short bias on this stock. My most likely final target would be around this $11. The reason for that is once you start coming into this range, you're no longer extremely overbought. So if I'm short bias, again, either I'm going to have a very little bit of size left or just be out completely, because again, this is where we expect the majority of the move to happen. If it continues to come down. Now, that is the analysis. If you want to go through the trade plan, that's what we're going to go through now. So again, you can see this white dashed line. This is just to show you where I averagely short, or where I've shorted the 100 shares. So that 15.36 is where I've shorted 100 shares. Now, again, we talked about having defined risk. We'll go through how we did that first. But the reason I like getting short at this level is firstly, we have a target 14.25. If we break that, then we have targets at 13.50, 13.25, and again if we break that, 12.65, all the way down to around 11.10. Again, that's going to be my final target. So the further we fall down, obviously the more upside opportunity there is. But if it goes against us, let's say Palantir does skyrocket and we go to 17.50, we go to $20. If we do continue to go up, again, I may be short biased, but there's no reason to be stupid. There's always a chance it could go against you. No trade is going to be 100%. So we need to be hedged for that risk. And how are we doing that? We're doing that through a covered stock strategy. What this basically means is that over on Palantir, what we're doing is we're shorting the shares, but what we're doing is we're buying a call to hedge that risk. If we go over to monitor, you can see we did fill the trade today. We paid, I think it was 1360 or 1460, which basically just means that's a credit. So it means we receive $1,460 essentially. But again, as you can see, our strike is at $15. So what this basically means, and the way I can go through it, is open this in an analyze tab just to make it all clear, because me going through it is probably going to confuse you some more. But what you can see is we bought a call, we've shorted the share. So again, we shorted those 100 shares. We got our average at 15.38 or 36. Now we've also bought the $15 call. Now you can see obviously that's already in the money. So if Palantir continues to go up, obviously that is our protection, because come into expiration, again, we're only holding this 4 days out. This will expire Friday. If say at Friday Palantir is at $20, $25, or even at $15.50, what will happen is that this call will execute, and it will cover our 100 shares. So even if there was a short squeeze, even if it went, 500% up from here, it wouldn't really matter. We've got a defined risk if it goes against us. And again, what is that defined risk? So again, we got the credit of 1460 on that. What that means is our max risk is, and for some reason that's on there. Let me just get rid of those. You can see our max risk is $40. So again, if it's anywhere really above $15 into expiration, obviously we're going to lose $40. That's fine. We can define risk. That's nothing. Now, if it starts to go away, if it goes down to $14, you're going to be up 58. If it goes down to 13, you're going to be up 160. And again, this is by expiration. So if it happens before that, when it goes in your direction, you're going to be up. And if it goes against you, again, you're not going to be down that max value. And that's the thing I love about doing this strategy, is you have basically a chance to be up more than you do to be down. Because again, if it goes against us, who cares? We take that max risk. If it goes in our way, again, basically unlimited upside. So that's how I'm looking to play it. Now, there's two ways, or what I kind of do is adjust the strategy as well. So if Palantir moves quite quickly, like even if today we came down to say $14, what I would probably actually do is lock in the shares, or at least lock in some. Reason for that is then no matter what, the trade, we've made money on the trade, and the trade is now risk-free. But what it also means is we're still going to be holding that call. So let's say we lock in those 100 shares. We make be about $140 on the shares. The call, I think, was about $76 we paid for it. So it means even if that call then expires worthless, we lose about, we make $50. But if Palantir starts to move back to the upside, or even if we just wait for it to go back to $15, that call is going to be back up. It's going to be worth about $100, and so we can really profit on both sides of this trading as well. As the call is obviously long, it is defined, so even if it continues to skyrocket, we can make tons of money. If it goes against us, then again, we've already made our money on the trade. We can't lose money on the trade no matter what happens to the stock now. So again, we can hold that call if we want to. Again, that's always going to be down to you as a trader if you want to take on that extra risk, because you are essentially taking on more risk because you're giving up some of your potential gains. But again, you're not doing it for no reason. There's definitely upside on it. And the way I will usually trade it is if it happens probably in the first day or two, it comes down to $14 or less, I'll just lock in the shares pretty quickly, make this a risk-free trade. So then if the calls do pop, again, we can lock in those profits and potentially look to then short it again. If it happens nearer the end of the week, what I will probably do is, again, wait for a bigger move. So if it probably happens, Wednesday or later, I'll tend to not do that strategy of closing the shares, holding the call, because then I imagine more it's going to work in our direction overall. And, we can lock in maybe some money in at 14, lock in some more at 13, and if it continued down, maybe some more at 12. But again, right now we're in with small size. We're only shorting 100 shares. We're probably going to look to get more. And the reason I didn't go in full size today is, again, we're kind of pushing up today. We've just had the debt ceiling deal confirmed. Obviously, first trading day since it's been confirmed and everything's been solved. So the market may move a bit more irrational. Even today, we had like a 5-minute blackout period across most brokers. So it was just really a weird trading day. Didn't want to go in with crazy size. So again, shorting it just in case it starts to pull back. We got money on the table. But if it does continue high, that's really where we'll kind of get the bulk of the size. Probably $16 is where we'll look to probably hit in with probably 3 or 4 more contracts. Again, then we'll be risking about probably about $200 on the trade, but if it goes our way, we'll be looking at about $500-600 plus dollars of upside. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.